Welcome to the Crypto Ledger. Today, we're diving into a really fascinating story that's unfolding in the crypto ETF space. While Bitcoin and Ethereum have been grabbing all the headlines, another major player is quietly attracting a huge amount of capital. And it's doing it in a way that just defies all expectations. So, let's get right into it. Okay, let's start with this number right here. $1.12 times billion. That's how much net assets the new XRP-linked ETFs have managed to pull in since they launched. Now, to be clear, that's a massive win for any new financial product. But what makes this number absolutely mind-blowing is when all of this happened. And that's really the paradox at the heart of this whole story. This billion-dollar flood of cash isn't happening during some crazy bull market. No, it's happening right now as the broader crypto market is actually weakening. Usually, you need a ton of hype and a soaring market to fuel a launch this big. But XRP, well, it seems to be playing by a completely different set of rules. So this brings us to our central question for today. How in the world did XRP ETFs pull off this kind of success, completely against the market trend? And maybe, more importantly, what does this tell us about how the big institutional investors are starting to view XRP's role in their portfolios? To really get why the XRP story is so unique, we first have to look at the two ETF launch playbooks we've already seen play out. You've got Bitcoin and Ethereum, and they're basically polar opposites. Understanding them gives us the context we need to see just how different the XRP situation really is. First up, you have Bitcoin. Its ETF debut was a monster event. A true perfect storm. This came after nearly a decade of regulatory battles and just massive pent-up demand from institutions. And the timing? It couldn't have been better, launching right as the market was heating up. It was just an absolute explosion, right from day one. And then you've got Ethereum. Its ETF launch was the complete opposite. It was a much quieter, more subdued affair, kind of like a slow burn that didn't really get a lot of attention at first. It took a good while for Ethereum's ETFs to really find their footing and gain traction. So you've seen the explosion and you've seen the slow start. XRP is something else entirely. Yeah, XRP's journey just doesn't fit into the Bitcoin box or the Ethereum box. Asset managers and industry experts are starting to see it as something totally new, something they're actually calling a third path. Let's take a closer look at what they mean by that. So, what exactly is this third path? Well, it's a strategy that's less about riding the crazy highs and lows of the crypto market cycle. Instead, it's built in something much more stable. Real-world adoption, and a solid underlying infrastructure. The idea here is that investors are looking past all the speculative noise and seeing the fundamental value in its potential for things like cross-border payments. The story is shifting from pure speculation to actual utility. Now, this third path idea isn't just some theory we pulled out of thin air. The people actually launching these products, the asset managers, they saw this coming. Their insights are what give this idea real weight. And on that note, here's something interesting. Did you know that 80% of the people who watch our The Crypto Ledger videos are not subscribed? Please help us with your subscription to continue uploading more valuable information and reach more people. Your support truly makes these explainers possible. And here's the validation coming straight from an expert. This is Matt Hougan, a major player in the ETF space. He literally calls it a third path, directly acknowledging that what we're seeing with XRP is something new, something fundamentally different from what we've seen before. Hougan really drives home just how important that billion-dollar figure is. He says it's really exceptional, and he's emphasizing that it's exceptional because it happened in a down market. He's basically hinting that if the market were booming, that number would likely be way, way higher. This isn't just a success story. It's a powerful sign of incredible resilience. Okay, now let's bring in another expert voice. This is Stephen McClurg. His firm has launched several digital asset ETFs, so he's got a real insider's view. He mentioned that even before trading began, the buzz around XRP was just different. It hints that the people in the know were already anticipating something big was about to happen. McClurg also gives us another key concept for understanding XRP. He calls it a divergent asset. So, what does that mean? Put simply, it's an asset that's starting to break free from Bitcoin's gravitational pull. For years, almost every crypto has just followed Bitcoin's lead up or down. A divergent asset, however, starts to march to the beat of its own drum, driven by its own unique fundamentals and use cases. So, let's pull all this together. What does this all mean for investors? Well, the success of the XRP ETF is way more than just a big number on a screen. It's a signal that the market itself might be maturing, evolving, into a place where an asset can attract serious investment based on its own merits, regardless of what the rest of the crypto world is doing. All right, so let's quickly recap the key takeaways here. First, XRP's ETF success is a huge deal precisely because it's happening in a weak market. Second, it seems to be blazing a third path, one that's built on real-world use, not just speculative mania. Third, experts are starting to label it a divergent asset, which, finally, means it might just be starting to decouple from Bitcoin's powerful market rhythm. And that really brings us to our final big picture question. We've just watched one major asset completely break the mold. So, could this be the start of a more mature, more diversified crypto market where different assets can truly succeed on their own terms? Is this the beginning of crypto's great decoupling? The Crypto Ledger Disclaimer. The information presented in this summary is for informational and educational purposes only. It does not constitute financial, investment, legal, or any other type of advice. The Crypto Ledger is not responsible for the decisions you make based on this content. Always conduct your own research and consult with a qualified professional before making any financial decision. Cryptocurrencies and digital assets are inherently volatile and carry a high level of risk.